Hey folks, and welcome to the Pipnotic Symposium for the 10th of June 2020. Today's Q&A, so I'm going to go over some questions that I've received. One in particular sent in by a gentleman who was asking about buy and sell zones that we discuss so much at Pipnotic. And I just wanted to spend a few moments reiterating the theory and talking about why buy and sell zones are important and what they are telling us and how we find them. So if we look at this chart here, this is just some random chart, which happens to be the American dollar Swiss franc. And if you look at this chart, to an untrained eye, it just looks like a whole lot of randomness, where price is moving around higher and lower. And so the question then becomes, well, why is it moving higher and why is it moving lower? And if you're looking at the price of anything, especially something that is traded for the purpose of earning money, I mean, the question would be, well, how would you know when to buy and when to sell? And this is obviously the golden question, the answer of which eludes most people to a very high degree. And so I just want to spend a couple of moments on trying to help answer this question. So if we look at this price chart, and we're only going to look at this price chart on this time frame, we had a low point here, we had a high point here, and since these two price points were established, price came down to here. And since this and this point were established, price managed to move back up to here. And this is telling us something very important. I'm just going to connect these circles. We move from this low to this high, and from this high to this low, and then from this low to this high. Okay? And so if you look at this, the question then becomes, what's going on? What we need to do in a situation like this is we have to identify an area where you can see an increase in buying or selling, either in one direction or the other. We want to see where we have serious buying and selling, because this is showing us where we have price sensitive areas. And if we focus on this price chart, see that just here we had a strong push lower, and we know this is a strong push lower because of this little test here. Okay, this little test here is telling us that we had an interest in selling at this price point. So we're just going to mark this area off. The software brought this to our attention and it's now been used and removed, so we'll just mark this off. Price went just beyond it and then we went lower. We had another attempt, price going beyond it, and then we left. Then price returned to this period of consolidation. Price moved sideways, it left, removing this, telling us that we have significant buying here. Price moved down, we tested the edge of it, we moved up, and then we started to print these white candles. Price is moving up and down, and we know that this is happening, number one, because we have white candles, which the software is showing us, but number two, because we had a very strong departure and move away from this area. And notice that we had this area here, price went through it. Could it trade beyond that level? No, it could not. So it came back below it. We had another attempt, price came back below it. But notice here that price had to come lower than this little area here. So we had this little area, it was tested by this candle here. We had a significant reaction, but price had to go lower. And so each time price moves lower, we're advertising cheap prices. Each time price moves higher, we're advertising high prices. Okay, so price formed this low, we tested it, we moved lower, advertising cheap prices. Price rejected at this area of demand. We moved sideways for a period of time, establishing an area of accumulation or a buy zone, and then price left. And this area here of supply was consumed in that price traded above it and held above it from this price point. So that is telling us that this area here is significant. So this one is now gone. Okay, so the next point of reference for us becomes this area just here. Okay, and so what you need to do now, what I like to do is I like to focus on the identification of buy and sell zones. Okay, we had this little area here, price came up, price came down to it, and now price moved through it, hence the dotted box. This has been removed, it's been consumed. Then price kept coming, it came a little bit lower. And notice right here in this little box, we have, in this little white box, we have two candles, we have two green candles. The first candle is very bullish, and the price went up, very little wicks, and the next candle we have bigger wick. And so this wick just here is telling us it's actually an arrow. It's actually an arrow that looks like this. So when you have a candle that comes down, this wick is pointing to something. So I like to refer to wicks as arrows, and they are simply telling us where we have a price sensitive area, either above price or below price. You can see here we have a very small arrow, and this little arrow is telling us where we have a buy zone in this situation. Okay, and in this situation it's a buy zone because it happens above demand. So we have demand, price moves up, we close, we move down, and then we move up. And this moving up and then moving down, as you can see in the form of a wick here, is what I'll refer to as a slingshot. If you consider a traditional slingshot, what do you have to do to get the object in the pouch to travel as far as possible? Well, you have to pull the slingshot, the elastic, you have to pull it back as far as possible. And when you release it, it flies very, very far. And the further back you pull the slingshot, the further the object in the pouch will be launched. And the same applies to this here. If you have a wick like this, this is simply telling us that we have the slingshot that's been pulled back. Okay, so you have price that's going up, it's getting pulled back down, the slingshot getting pulled down, and then it leaves. Okay, and this is what we have here. And so the low of the slingshot becomes the buy zone, and so this is a reference point for the future. So this is exactly where you want to look to begin to buy should price return to that level. Okay, and this is what happened, and you want to do this as close to demand as possible. This is the origin of this move. This entire move is standing on this area just here, not this one, not this one. Okay, this and this, these are all also areas of interest, but because they happen closer to the point where price turned around, they become lower probability. So in a situation like this, I mean, you have probabilities scale where we have, this is pretty much 0% probability of a trade working out at this price point. And this, while there's going to be no such thing as 100%, here maybe we have about 80% probability. Okay, and so the closer you get to the origin of move, the higher the probability. And this, because this here is the origin of this move, and it is an origin because we have well-formed demand, this becomes the 80%. Just here, this is the 80%, this is 0%, and this is about 50% just in the middle here. The closer price comes to the highest possible probability, the better. Price came very close to it at a buy zone. So this is a very high probability trade because it's occurring at a buy zone at an area of demand within a very high probability zone. Okay, so we can expect that price is going to react there. Once price returns to this price point, which it did, we mark it off, it was tested, the new buy zone becomes the low of the lowest pullback since the slingshot, which is now the low of this one here. So we can move this down maybe 1 or 2 pips like so. So this becomes the new point of reference for future tests. Okay, so we have this one here. You mark the line, you move it forward, and this is where you project the line for potential tests in the future. Price came to that area, we moved through it, and we moved to the area of demand, which is marked off by this blue box just here. And if we look above price, we have all of these dotted boxes, and just to let you know what they mean, the blue boxes refer to the 4-hour time frame, which is this time frame. The red ones refer to the daily time frame. Okay, so this red box here, it was calculated using daily data. So we can actually see daily supply and demand and buy and sell zones on the 4-hour chart, because this is how I've written the software. Okay, and you can see here as well, we had price come down. We can't see the details of it, what it looked like on the daily chart, but this area of supply was formed, price left, and then it came back, it poked into the area, and then it left. When price does this, when price moves into an area, the high of that becomes a new sell zone, which tells us you do not want to be selling for a price any cheaper than the high of the deepest retracement to the supply. Okay, so this becomes a reference point for the future. Price pokes into it, it leaves. Okay, and so you can either take the first trade and you can base it on the sell zone of the initial release, or you can wait for price to tell you where we have price points that people are looking to transact at. Okay, this happened here. Price came to that sell zone once, twice, and then we left. And now price seems to be having a bit of trouble moving beyond that price point for the time being. Okay, if price has not traveled to the opposing side of the market to find demand, which is down here, there is a very high likelihood the price of this asset will move down from sell points. If price is able to move from a sell zone to the other side of the market into a demand, well, the likelihood of price respecting this area up here in the future becomes lower. And why is this? Well, this is because when price moves to the other side of the market, this shift in liquidity, this shift in momentum has already started. So you want to try and get the trades that happen to buy and sell zones before they reach the opposite side of the market. Okay, now price has already moved to the opposite side of the market. What does that mean? Well, that means that you might want to consider looking a little bit higher than these sell zones that we have marked off historically. Okay, this one here, price poked into it. We've actually moved into this area of demand here at the bottom, and now we're having a bit of a reaction. Okay, and so this is essentially how we can use supply and demand and buy and sell zones to find these price sensitive areas in the future. We have price that's moving around within this little this range from this area of supply to this area of demand, and why you can trade in the middle on the smaller time frames. It's not really advisable because things are less probable in the middle. You have to consider, for example, risk to reward ratios. You want to ensure that you're buying and selling at a place where there's a high probability that price is going to leave and travel far from. Okay, and you can see from up here, there's a high probability that price is travel a significant distance before it returns. And so it's probably going to travel to the opposite side of the market, to the buy zone, which is here. Price went there, and now we're starting to do something else. Okay, so you can see on this price chart what is going. This is a very, very clear scenario. If we go to the daily chart, you can do the exact same thing over again, but the picture may change because now we have more data. We have different buy and sell zones based on daily supply and demand. And if you look here, where has price historically departed from in the form of a sell zone? And so you find your supply. We have supply here, and you want to mark those areas off. I'm just going to use a horizontal line. I've identified my supply, and I look for those wicks, which are the slingshots. We have one here, we have one here, we have one here. Okay, and this one here is nice and clear, so we can mark off that one. I'm just going to mark all of these off because these are interesting to us. We have this one here. Okay, and I'm not going to do anything below this because this is very choppy. When you have choppy price action like this, it becomes uninteresting to us. You want to focus on price points above this mess that you can see here. If we look at this here, notice that we had this little price structure here, and below that we had the establishment of a sell zone right here. Let me refresh this. Price came to it. What does that mean? That means a new sell zone becomes the high of the deepest retracement. So the slingshot was pulled back to here. Price went to it. Okay, and then notice when price left, we did not manage to move beyond this. We actually ended up stopping at this area of demand just here. Price poked into it, and then we left. When price fails to move through, so above or below and beyond an opposing area of demand or supply, this is a warning sign that the flows have shifted. So when you see this, because price was unable to consume this, well, there's a high likelihood that we saw an increase in buying pressure at this price point. And so this is telling us that lower probability is to sell, higher probability is to buy at this price point here. Okay, so price goes, it moves through this area here. We move to this one is gone. We move a little bit deeper. You can't see the details so much in this time frame, but price is kind of poking deeper. We had this one here, we went deeper, we moved through it, and we moved up to, I'm guessing we're about right here. And this is kind of the high of this candle here. So there's a micro slingshot on this time frame, maybe on the 4-hour or the hourly chart, which we can't see the details of on this time frame. And then this is where price left from. Okay, so this area has been removed. Okay, and this tells us that we have a significant interest in selling from this price level. So I'm just going to remove these here. We're going to focus on this one here. So this is the cheapest price that you want to sell at, because last time price returned to this area, we really moved away. Okay, above that we have another sell zone, so you can move this up higher. So once price moves to the edge of a sell zone or a buy zone, you want to be looking for sell zones and buy zones that are beyond previously tested areas. Okay, this one is tested. Where do we have another one that is beyond this one here? We have another one here. This is the wick. Price moved beyond this as expected. It moved beyond this one, and it stopped at it just here on this green candle. The next candle we moved beyond, we moved into this micro supply, and this is where we left from. Okay, and so when you have price moving around like that, it's telling us where we have these very price sensitive areas. And you can see that we had an area of demand here, micro demand. It was tested. When that area is formed, you mark off the low. This becomes the buy zone for this area of micro demand. Price came to it, -1 pip, and this is where price turned around. Notice above price here that we have something going on. There's not a lot of clarity on this time frame, but we had an apparent sell zone here. Yeah, we have one there. Price went beyond it, and this is happening at a daily supply, which is this one just here. Okay, and this is supply because we had an area, we have accumulation here. Price moved beyond this high from this point here. This area of supply moved through this. This is the area that did it. So this is supply, and this is the beginning of the sell zone. Price went up to it. We went a little bit deeper, and now price is moving lower. And so the next question is, well, where is price going to move from now? Well, where do we have demand below price? Where do we have a buy zone? Well, we actually had a buy zone here. Okay, so where do we have demand? We have demand. We had that here, as you can mark off from the low. Here we have that white candle. We had price rallying. We moved sideways. We accumulated, and this candle here closed above this period of accumulation. So that tells us that we have a keen interest to buy from this price point here. Price stopped at that point, and now we are figuring out what we want to do. Does that mean that price is going to stop here? Not necessarily. Why? Because we have accumulation. We have the departure candle. What is the low of the departure candle? It's here. This is where this candle had to move down to in order to attract buyers, in order to seek liquidity to drive price higher. So the new demand zone becomes from here to here. Okay, so that's what we have for the time being. So this is the new buy zone currently, and until price moves back down to this area here, we can expect price to bounce to the 94, about 50-ish area. And for selling, well, we don't want to sell for a price any cheaper than the highs of the deepest retracements into this area of supply above price. Okay, right, 20 minutes. I'm going to stop rambling. If you have any questions, please add them to the YouTube video or post them in the Discord channel. Thanks for watching.